Testing, testing. 32%. Okay. Good morning, everybody. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Tuesday, November 22nd, Thanksgiving week, 9:02 Eastern Standard Time this morning. Looking at CNBC, 1 year ago today, the NASDAQ hit a new intraday high. We are now 32% from those highs. Wow. NASDAQ rough 12 months, 32% from record intraday high. Wow. That's in 52 weeks. So that's something to say. I mean, if you're still here, so you're a survivor and you understand that these are cycles and this is what happens. All right. Back at it again. My apologies for not doing a video yesterday. Had some errands to run, was driving first thing in the morning, but I am here all week. So ready to serve, ready to help as always. No morning note on Thursday. The market is closed on Thursday. Enjoy your families. Happy Thanksgiving. We'll talk before then with one more morning note tomorrow. All right. If you haven't already, bottom right-hand corner of your screen, there's a little black logo. Click on that. Turn notifications. Subscribe to our channel. Make sure to like these videos. If you like these videos, let's get to it. You're probably looking at the title of the actual video saying "Frustration Station," and that was a note I sent over to our team this weekend. Was that we're basically in frustration station, where it's not bearish enough to short and it ain't bullish enough to buy. That's where we are. Really, yesterday watching the market, talking to the team, was really just one trade out there that was worth it. It was Tesla puts. He filled it on his own. He did a Tesla put. Again, it was just so slow out there in terms of volume. I didn't want to add any more risk or any risk to our team, at least on that trade. He caught it. Well done. He took half of it, letting the profits run. Again, it wasn't even a lot, to be fair, but Tesla was down yesterday. Let's go around the horn with the market. Dow futures up 149 this morning, NASDAQ up 45, S&P up 0.49%. Again, that's frustration station, where yesterday we were down, then chop, and then down again, and then now we're up on literally nothing new. No new news. Nothing has really changed. No moving average were broken or bounced on. I mean, it's just low volume chop for Thanksgiving weekend. I'd expect that for Christmas. Now, again, we'll be watching, but again, don't expect a ton. I even said on the video, if there's a week to take off, this is the week to take off, man. Just kind of relax with your family and enjoy and keep your capital where it is in your portfolio. You don't need to deploy it. You want to talk about frustration station part two? Take a look at oil. Oil touched 76. Remember, our support was right around 75. It did bounce off that on some OPEC news. Talk was to increase output. Saudi Arabia actually declined that. And speaking of Saudi Arabia, they had the biggest upset victory I didn't see, because it was at 5 a.m. this morning. Saudi Arabia over Argentina, World Cup favorites, 2-1. It's a weird world out there. Let's go ahead and keep going. Russell 2000 up 0.47%, 1851. Crude oil up 1.5%, 81.22 a barrel, like we talked about. Now, again, it's right below the 100 moving average on the 1 hour chart. Give me a second. I got to send this out. Sorry about that. I forgot to send that. Okay, where were we? Sorry about that. So we're taking a look at crude oil. You can see right here, right below the 100 MA. Nothing really to play here on the 1 hour chart on crude or at all. The best thing to do with crude oil, in my opinion, is to trade either futures against it. You could do contracts, but again, it gets a little wild. Or you can start doing the proxies. What's a great proxy for oil? Obviously, you could say XLE. Back in the day, they have decoupled a bit, but it did fall yesterday. So again, that's a one way to trade it. And we talked about this too, guys, about XLE. Look at this. And guys, this is no secret on why, I haven't been wanting to jump into energy, and I have multiple times. If you've been watching XOP, I bought CVX, all those names, right? And look at us where we are in the weekly, guys. We're hitting some resistance there. Look at that, right around 94. There's some resistance there. Maybe we get back down to 80. Who knows if oil stabilizes here? But again, we're right near what, 80 a barrel, 81 a barrel. Don't be surprised we fall a little bit with less demand for crude oil over the winter. So heating oil is something different depending on weather conditions. But in terms of energy, you could see the proxy for oil at least it used to be, was XLE, because this is all of the big refiners and the biggest oil players in the market. So again, you could kind of look here. There's not much going on the hourly, so you kind of just say, forget that, I'm not doing that. But you could always short the Canadian dollar against the dollar. The Canadian dollar is a proxy for oil. So again, guys, maybe you're not a big commodities trader. Maybe you just started with Forex, or maybe you have done Forex before, but you kind of want to go ahead and trade it as well. And you're not a big fan of options and decay. Forex is not a bad way to go, to be honest with you. Seeing the volumes pick up as well as we've been watching it, and you could see that big fall that we had yesterday right here. And this is all from the big rise that we had from Friday to Monday, because it moves inverse. If the Canadian dollar goes down, that means the Canadian dollar is getting stronger. That means oil is bouncing. Look at oil today, up 1.37%. And then you could see from Friday to Monday, as oil started falling down, the dollar gained strength and the Canadian dollar got weaker because crude oil. So again, let's take a look. Actually, I'll go actually illustrate a little easier. We're going to go to edit studies. Let's see. There's not much going on, guys, to be completely honest with you. So let's really focus on a more educational basis. We'll do a custom symbol, very easy. We're going to put /CL. That's crude oil. And then you could see that inverse correlation. We've talked about that many times. Inverse correlation, where if crude oil is down, the Canadian dollar also goes down, but that means the Canadian dollar goes up. And you could see the divergence. And let's go ahead and go to the daily. And the exact same thing, as oil continued to rise, right in September. This is Canadian dollar. You could see how much we've fallen. But again, the dollar, in a sense, peaked. The dollar peaked right here. You could see this. This is what? This is oil. Sorry. You have oil peaked right in June. You had the Canadian dollar right here. And then we started to diverge. And then you started seeing the Canadian dollar go higher. And then you saw oil go down. So again, that is probably the best way I could tell you guys to play oil, because we talk about oil a lot. I wouldn't want to go ahead and buy energy companies here quite yet. We saw that weekly chart on XLE. Take a look at CVX. Very similar. I mean, you're buying near the highs at this point. And again, I have no issue of buying energy stocks, no issue with that. But again, let's get a better price. That's all I'm saying. Look, we're hitting some resistance on XOM, starting to hit some resistance on CVX. If you wanted to go ahead and actually just take a look at the market as a whole in terms of energy is still very relatively cheap. But again, in terms of technicals, I think you can get a better price point. I think you hold off on buying any energy here, even though Goldman and Citibank is saying they're best buys. Yeah, near the highs, sure. Again, if we start breaking above these highs, then things change. But as of right now, we're not there yet. I expect a little more of a fall, and on an XOM or a CVX, maybe you guys start testing some moving averages around 100 or so. So again, we may have a little more of a downfall on XOM as crude oil continues to sink a bit. We'll see what happens in terms of OPEC output. That's a lot. Gio says, I want to thank you for the Disney call. Got in this week's calls for 1,000% of the news. I said that on Twitter. How about this? I had Disney calls last week, and we had unusual option activity, big time, and I played them. Here's the worst part. The news of Bob Iger being in as the new CEO happened over the weekend. We were literally a couple of days too early. The worst. If you got a Geo, congratulations, but I'm sick. I'm sick because we got it right. We got it right. This is this actual setup. I actually want to thank you for bringing that up. Here's the daily on it. And we're watching the daily. And again, we had the gap fill level we were looking for, right? 98. Check this out on the 1 hour. This is frustration station. We were waiting for this, the 23.6 fib, and we broke it. We broke it. We were right here. We got in, waiting for that breakout. Then we retested the breakout. We were green. This is what we had the 100 calls. Why did we play the 100 calls? Take a look at this. Take a look at the daily. Right there, you had the 100 calls. We had the gap fill here at 98, which is what we wanted. I explained it all on the actual watch list. Check this out. Let's see. Makes me sick. I'm just like, man, so close. So let's see, put the chart up on my market blog. It's on the blog. Let me see if I have the Disney chart. I really want to back test this with you guys and show you. This pisses me off. Here you go. Okay, here's Disney when we got in the trade. Disney, I'm keeping an eye on. 96.61 is the alerts. That is, let's go to the date. Let's go to the hourly real quickly. How about this? 96.61 is the alert, right? Got the 200 MA at 99.59. So this was higher here. That was the target. The 23.6 fib, let's see if we can get that 99, 100 strike calls might be in play. Well, it fell as into Thursday and Friday, and then we got what the market was expecting, I assume, was some news that the CEO was ousted. And what did we get to? We got as high as 101.58. So that's the really rough part of the World Cup. I mean, World Cup, excuse me, rough part of the market. It's not enough to be right. That's something that you guys need to understand as an options trader or anything else. Being right is not enough. I've been doing this now for 8 years, and it is not easy because there's times where I've been right, but just late or early, and it's just frustrating. But this is the thing, man. So I really want you guys to see it firsthand that you're not alone. That frustration station, what we all live in today, right now, is alive and well, and we are all going through it sometimes. But right now, we're just going to take it easy, see what the market gives us. Gold futures up about a quarter point. The reason the dollar is down today, Bitcoin is up higher. Uh, let's see it. Let's see Bitcoin here on an intraday basis, 16,339 more FTX highlights. Real quick on Bitcoin, again, I don't want to take too much time on everyone's hands because I did want to talk about this. Take a look at this at a year-to-date basis. I mean, Bitcoin has actually been smothered, has been absolutely destroyed, right? Wrecked, whatever you want to call it. And again, guys, if you have traded Bitcoin before or you own Bitcoin before, and we going ahead and spread this out a little more on terms of time. 2017, were you guys part of Bitcoin? I was. I owned Bitcoin. My first start, I think, was right around 3K when I bought my first couple. Not like two, just like one and change. And then I added up to one. I didn't buy one right off the rip. Then it got to 5,000. And then right around 15, 16,000 is where we sold. My buddy sold, not me. I held. And then we went through all this stuff. I didn't dollar cost average to this point. I started dollar cost averaging through COVID. So again, you could see all of this. Remember, big drop from about 20K down to around 5K, from 19K. Then we popped all the way to 68 and then back down to 16K. This is what you get with these kind of assets. These are high risk, high volatility assets. If you have this expectation that you're not going to go through pain, but you want to get these high returns from 19 to 68, you're fooling yourself. You can't think that way. If you are about risk and you want to take a little more risk in your portfolio, you're younger or you just have a different risk profile, maybe you own more crypto than the average investor. Would I give Bitcoin to my grandmother? I wouldn't tell her that I did if I had to. I wouldn't tell her that I got her a Bitcoin. I wouldn't have her invest in Bitcoin because she'd lose her mind. And that's not what I would want for her. So again, guys, when it comes to Bitcoin, just keep the expectations low, man. Don't expect, that you're going to get to 68 tomorrow. It cycles. Do I think we're going to go higher above 68 in Bitcoin ever? Absolutely. I have no doubt. If you tell me within 10 years will we get to 100K? Yeah, absolutely. That's what I think. That is so hard to invest upon because you need that faith in the asset. And regardless of any asset, that's a stock, that's a commodity, you're buying the asset thinking, whether it's your home or whatever, that it's going to gain in value over time. Bitcoin holders are the same. I think there was a statistic that I think like 60% or 80% of Bitcoin holders are in the red. Again, I don't know if these individuals bought the top or whenever they bought. I don't know what their target is. It's such a blanket figure to say. And again, you just have to look at Bitcoin as saying, this money that I have invested in it, it might lose 80%, 90%. If you're okay with that, then fine. But if you're not, you need to be not even near that space because it is extremely volatile. But the good thing is that the returns are great. So again, you get the best of both world, the worst and then the best of the world. So you get no happiness anywhere. Or you could just buy an S&P 500 fund and just put it on autopilot. Much easier. You could always do that. Solid Geo. Let's see. I was on early on the Disney call. Like, Kevin. Yeah, exactly. But that sucks, man. I can't believe it. And again, it gapped up in the morning. If we would have just bought those Disney calls for next week, we would have been in the money. But we did it for this week, expecting that volume to build, and that's what happened. So that really sucks. But we'll eat it. That was the only loss for the week, and that's the only thing I remember. I kind of think about it. I always remember my losses, but that's just how I am. The saying goes, "You're only as good as your last trade on the street." Unlucky with Wales. Happy World Cup. Happy World Cup. USA looking sharp on a 1-1 tie against Wales. We gave it away. Still due to hold corn against Iran and England. We got England and the United States on Friday. Revolutionary War Part 2. How about Tesla keep bottoming? Oh boy, let's talk about it. We talked about this morning in regards to Tesla and them falling. It seems to me one thing stands out. I think Elon is just dipping into his Tesla piggy bank in order to pay for Twitter or to fix Twitter. Now, this is something that, as the major shareholder of Tesla, Elon Musk, when he's buying something expensive, this is his only form of capital. If you think about it, everything else is based on valuations on paper. I don't know how much the cash he has, but remember he had to raise debt for 44 billion for Twitter. So I expect Tesla to have more weakness as more Twitter drama comes around. We're getting a bounce today. Obviously, this is why I sold half yesterday. I mean, that's why Nick sold half yesterday. Excuse me, uh, because of the fact that hey, frustration station. We flipped like crazy. It's a reversal market. It's just about what it's been for the past couple of days. The target I have for Tesla in terms of where you want to start looking at possibly nibbling on or buying here is 160. 160 is your 200 MA on the weekly. Remember, we talked about the 200 MA on S&P 500 futures, and that is the same level that we bounced from. And we went from 3,600, or we were right here, 3,600. We're not 3,976. Could we get to 4,000? That was my target on the newsletter that I sent. Expecting 4,000 by Thanksgiving. I said that a couple weeks ago. We're pretty close. Let's see if we get there. Not 4,000, excuse me, but I think it was that 200. Here you go. I was expecting us to get to 4064. Could we get there? I mean, it seems highly unlikely, but if we break 4,000, maybe we get lucky. We'll see. Long term buy for Disney. Well, Bob Chapek was a pretty bad CEO. And my wife, who's a big Disney fan, absolutely despises the man. So, in regards to Disney, that's a big news. That's great and all. But again, let's go back to the charts. Just ugly all around. I mean, you're really just looking possibly the COVID lows of 7907. That's the only time you could possibly think about dipping your toe there. Right now, you're just in a range between 90 and around 110. If you start breaking out of there, fine. There's a gap to fill at 118. But again, 7907 is the COVID low. Could we get there on Disney? Absolutely. Do I think we get there? I don't. I think we chop around. So let's see if the market gives us a little more clarity. Maybe we can wait on Disney for adding with one more earnings report and see how they do in regards to the parks, people traveling, and of course, Disney Plus. So again, I would say 7907 being the COVID low. I wouldn't know exactly if that's very possible, at least this year. I doubt it, but maybe next year. Maybe we get lucky on a Disney where one more earnings report where you start seeing where, hey, is this fair value for the stock? The problem is that Disney Plus is such an expensive program for them that it's not profitable until 2024. And they're trading at a 55 PE multiple, which is very rich. Now, again, if you're doing on a forward basis based on their forecast, then you're looking around an 1821 price to earnings multiple. That's not horrific. I mean, it's cheaper than Tesla. Tesla has more growth, granted. 2978 is their PE multiple. But in terms of Walt Disney, let's do some comparisons here. We'll take a look at sector specific. Google is trading at an 18. I think I'd rather have a Google. They have more cash than Disney. Comcast trading at a 9, but that's Peacock, that's Universal. I still think Disney is a little more valuable than a Peacock. Charter Communications trading at a 10. Netflix trading at a 27. Pretty comparable, but I still say Disney is Netflix with theme parks and all the classic stuff. So nothing against Netflix, but again, it is a little pricey here as it has moved higher. Verizon is cheap. T-Mobile is expensive. That's cell phones. That's wireless service. AT&T 733. Meta at 14. So again, maybe Disney can get a little cheaper. Maybe Disney gets down to that 79 level. Then you start trading at around a 16, 15 multiple. That is very cheap for a legacy name, a Dow component. Walt Disney Company. It's not like some new .com or some new SPAC. This is Walt Disney World. I mean, we know what it is. We know what they bring to the table, how much money they make with the parks and the cruises and all their licensing and the products. A lot of it now, I think possibly that I think Disney just ripped the bandage off in terms of getting the new CEO out, but they need to cut costs. And this is the cycle. Remember, we talked about the labor market being so strong that wages are too high. Now you're getting the equilibrium where you'll see unemployment tick higher, labor costs go lower, inflation in my opinion, or we've said, in June really peaked. Now we're starting to see the rollover effect of these higher rates, which it means that it's more expensive to service the debt. If you borrowed money on your credit card in 2020, 2021, you locked in a pretty good rate. But now in 2022, look how much the rates have gone up. Credit cards, savings, what have you. It depends on the perspective. But at the end of the day, in regards to Disney, they need to cut costs. And I think when they say the words cut costs, the first thing that comes to my mind is ESPN because they have NBA, NHL, NFL, and MLB. That is very expensive licensing. Disney needs to work on it. Again, I like ESPN a lot, but I would love if ESPN spinned off. I remember having this conversation with my business partner Anthony on that since 2018. I said, you know what Disney needs to do? They need to spin off ESPN. That's what they need to do. Or I'm just going to say it. I don't think it'll ever happen, but I'll cross my fingers. Remember the date, November 22nd? Maybe, just maybe, Disney buys DraftKings and spins off ESPN, or DraftKings acquires ESPN, and then you have the DraftKings ESPN network partnership, and everyone's happy because maybe, just maybe,